Today we're taking a look at an alternate version of exercise 9-11 from page 428 of the textbook, chapter 9, reporting and analyzing current liabilities. This problem is on computing and recording bonuses. So the data reads that for the year ended December 31st, 2016, Lopez Company has implemented an employee bonus program equal to 4% of Lopez's net income, which employees will share equally. Lopez's net income pre-bonus is expected to be $1.7 million, and the bonus is expected expenses deducted in computing net income. So what does this mean? Well, that $1.7 million that employees' bonus is going to be calculated on, well, the company is going to subtract as an expense this bonus expense because it's a tax deduction for the company, and it's actually going to lower what their net income after bonus will actually be. To help run through the calculation, you need to memorize this very basic formula that the employee bonus is going to equal to 4% times the pre-bonus income minus the bonus itself. So what was the pre-bonus income? That's $1.7 million. We know the bonus itself is 4%. So let's just plug in some numbers. Let's give the variable b for bonus. So b equals 4% times $1.7 million minus b. It looks exactly like this. b equals 0.04 times $1.7 million minus b. So now let's take 0.04 times $1.7 million, and that comes up to $68,000, but that's not the bonus yet. Don't let that slip you up. The equation's not solved. The bonus is going to equal $68,000 minus 0.04b. So now we need to simplify the equation even further. Just add 0.04b to both sides of the equation. This b over here, that's equivalent to 1b. So 1b equals 68,000 minus 0.04b. Add 0.04b to both sides. This side cancels out, and over here we're left with 1.04b, and that equals 68,000. Are we finished yet? No, we know that 1.04b equals 68,000, but that's not what we want, right? We want to find out what b equals. What is the amount of the bonus that employees are actually going to get? How do we solve that? Divide both sides of the equation by 1.04. This side by 1.04, the two 1.04s will cancel out. What's left is b equals 68,000 divided by 1.04. And b would equal 65,385. So let's just recap here. Net income pre-bonus, how much was that? Well, hopefully you said $1.7 million. That's correct. Bonus expense. What's the bonus expense? How much will employees truly share in for the company bonus? $65,385. What's the net income after bonuses? We knew what net income was pre-bonus. What's net income going to be now after the bonus is paid out? $1.7 million less $65,385, or $1,634,615. What was the bonus percent? Bonus percent was 4%. Perfect. And what was the amount of the bonus again, or the bonus expense? $65,385. Let's move on then to prepare the journal entry to record the bonus due to employees, and it's pretty straightforward. It's going to get expensed out right now. It's not getting paid out yet. It's getting paid out at the end of the after the end of the year. So there's going to be a bonus payable, a liability created. So the employee bonus expense from above, $65,385. Since it's being paid out in the future, a liability has been created, a probable future economic sacrifice called a liability. What type of liability is it? A bonus payable liability in the amount of $65,385. If employees actually get this bonus paid out then in January 19th of the next year, 2017, what's the transaction going to look like? Well, the bonus payable is going to do what? It's going to go away. How do we make a credit of $65,385 go away? We're going to debit bonus payable for $65,385. And what's the company sacrificing to pay out that bonus, to clear out that liability? Cash in the amount of $65,385. And that's how you solve computing and recording a bonus.